changing how much is spent on defense, Social Security, and Medicare would be the first thing that would need to be done to really make this stable. You have to start from scratch and ask yourself if we really need 800 defense bases in other countries. What's the cost of all that? Does that keep us safe for a no? That kind of thing. Then it's like, okay, so we've been making our food less healthy over time, and now it's kind of ballooning into really high healthcare costs per person. If you look at Japan, they had and still have a big problem with people getting older. They are a lot older than us, but they spend about a third of our money on healthcare per person. Lyn Alden, a famous macro expert, recently used a meme to show how the U.S. economy is doing now and where it's going. A bus is on a rail track in the joke, and a train is coming fast. The bus shows how the market has behaved over the past 40 years, with money being the most important factor. The bus is destroyed by the coming fiscal dominance train in the second shot. Alden says that our long-held ideas about the economy and markets that were formed during the time when money was king are no longer valid. Monetary policy worked well during the monetary dominance time because most new money came from banks lending. This meant that central banks could either speed up or slow down the economy as needed. Alden, on the other hand, says that the U.S. and most of the developed world are now in a time of fiscal dominance with big bills and deficits. Because fiscal policies limit their choices, central banks like the Federal Reserve no longer have the right tools to run the economy well. Changing interest rates doesn't have the same effect on the budget as it does on bank lending and credit growth. As we move forward, Alden warns that measures that were important during the era of monetary dominance are likely to become less important. He also says that things are almost out of control. Taking austerity measures to restore balance, which is the only real answer, is not possible politically. Alden recently talked to Anthony Scaramucci, CEO of Skybridge Capital, about how the U.S. economy is going in a direction that can't be sustained. At the end, she gave a strong warning: nothing stops this train. This shows how hard it will be for the economy as it moves from monetary to fiscal dominance, since the usual tools that central banks use are becoming less useful. While the pandemic was going on, Powell called for more stimulus. So we kind of crossed the line where monetary officials usually try not to be too politically biased. He did say, we've used a lot of our tools. There should be some money to help, right? In that case, he crossed that line. Now, I'd say that what we're seeing on the other side is that the market is getting a huge amount of money. But he doesn't want to say anything about the money side because he kind of goes back to the idea that he doesn't really see that in his situation. If a central banker wants to be flexible about this, I think it's time for them to say, it's hard to do any of my duties when deficits are this structurally big. This is because a central bank's main job is to speed up or slow down bank lending. That's the main thing they're meant for. And we're now in a fiscal dominant situation, which means that annual budget deficits are higher than the amount of new bank loans. So those budget gaps have a bigger effect on the economy in many ways, like through bank loans, and they can cause things like inflation. They can make things like nominal GDP run high, which can lead to inflation and its effects. It basically says, look, I don't have the tools to deal with what's going on there, so if those requirements are to be met in any way, there needs to be a financial reaction. So for now, it's kind of politically okay for central bankers or government officials to say, look, yes, there is a fiscal problem in the long term after that, though. They always add, but we still have plenty of room. No one is going to say that the real road is having problems while they are in charge. I also believe that there should be more openness about that matter. Anyway, I'd say, look, if you want me to be able to do my job, you need to tone it down a bit. If not, I would resign and say, look, you put me in a position where I can't do my job because I don't have the tools to do my job. Changing how much is spent on Social Security, Medicare, and defense would be the first thing that would need to be done to really make this stable. You need to start over. Do we need 800 military posts in other countries? Does that protect us for a no? How much does all of that cost? That kind of thing. Then it's like, okay, so we've been making our food less healthy over time, and now it's kind of ballooning into really high healthcare costs per person. Take a look at Japan. They had and still have a big problem with people getting older. There are a lot more old people there than here, but they spend about a third less per person on healthcare and still do better. It's clear that we have some kind of healthcare spending. That sounds like a nice way to say that Japanese people are slimmer then. Americans? Is that a nice way to put it? In any case, that is a big part of it. It's both the way people eat and the fact that our food business makes a lot of processed foods. So it's not like one group just gave up for a short time. The combination of how people are and how this very process background framework is set up makes all the hard decisions very, very easy to make. The first is our food. Both our individual choices about food pattern and the way we pay for healthcare all contribute to a completely rising cost of healthcare. Then you can do things like test your mean value for Social Security. There are at least some things you can do to try to get that back on track. The problem is that none of these things are likely to happen, let alone all of them at the same time. I believe that person, even one with good intentions, will find it very, very hard to do that because of how things are set up. And even if they win an election on that, they probably won't win a set as soon as some of that is put into place. In other words, the last time developed markets had a debt problem was in the 1940s. These problems also happen in emerging areas these days. Putting together, what's going on in math right now and what's happened in the past gives us a sense of what this kind of thing looks like. Technology is obviously not the same. Culture isn't the same. There are lots of little things. Basically, I would say that when a wealthy country has money problems, it starts to act like an emerging market in some ways. At least not all of the crises happen at the same time. You don't really have a before and after chaos. These days, it's more likely a bunch of events that kind of come together. So one important thing that starts is the central bank losing control of its balance sheet and never being able to bring it back down. They have to keep explaining why they're not really paying off their debts and making the debts more valuable. There is no doubt that their balance sheet is getting better, but it's getting better faster than it used to. That's kind of the first step. I'd say that we've been in a state of fiscal dominance since about 2019, when we had the repo problem that most people know about. But there was a bit of a plumbing problem with money in September 2019. I'd say that kind of marks the beginning of some of the effects of fiscal dominance. And that wasn't a disaster because no one felt it. But right after that, there was the outbreak, and then there was the bank crisis of 2023. You had a guilt trip in late 2022. You need someone to blame. Yes. And I think that's what you see for years and years and years. Now, some of the worst crises have happened. For example, the Social Security fund ran out in the middle of the 2030s. And if that isn't fixed in some way, either through spending or income, then people would only get a certain amount of the benefits they were expecting after that. It would only get money from current tax collections and not the present fund. Along the way, you start to have these little crises. It doesn't just go from normal to Mad Max, though. The events that happen are pretty much what people who study developing markets call a slow train. This is a very simple question that buyers want to know. I am going to ask it. Will everything be okay? I believe we will be okay. I think you should put yourself in a place where you can be as okay as possible. I believe you want to get ready for any kind of change by getting ready for yourself, your position, and your case. There are always good and bad people in the world. In other words, that's always true. But big changes in the way currencies work aren't really the end of the world. In a way, they're just the end of how some things have been for many years. After some kind of adjustment, it stays that way for another few decades. I would say it's annoying, but there are several ways to get along with it on the other hand. In other words, that's always true.